All right, so I'm excited to be here with Melinda Smith, and we are talking through kind of the home ownership path. And Melinda, you work with a lot of buyers, a lot of first-time
Mhm.
buyers, especially, and you kind of help them with the process of what they need to do to get ready and how they can prepare themselves so that when we go out and are looking at houses, they know they can shop with confidence, so to speak, and know that they are ready to buy a house. So maybe somebody's starting right now and they're interested, but they're not ready yet. Kind of talk us through how this works, how the process works overall, and what somebody's going to need to have available to pay attention to and to give to you even.
Okay, so the first thing I ask everyone is, what is your why? There is
Mm,
a reason why you're going to purchase. Are you a first-time home buyer? Has your family gotten so big that you now need to move into a bigger home? Have you relocated? What is your reason that you are buying a home? And so I always share with everyone the reason that my husband and I bought for the very first time.
mm,
So we had three small children. Our oldest child had Down syndrome, and it was time for her to go to school. And she had to go to public school. So I wanted to move back into the school district where I grew up, where
mhm.
they had an awesome special education program. So we literally, my husband was in our house that we did not own yet. With the owners were in there. My husband was in there painting. They were so gracious to us,
Oh,
and
wow.
we had to show proof that we moved into that house. And the superintendent's secretary lived around the corner from us, and so she told the superintendent, she said, "I already saw them up there. They've moved in. They've moved in. They're good." So yeah, so that's our why of why we purchased for the very first time. So what I tell borrowers is there's three things that you need. You need
Mhm,
income, credit, assets.
mm,
So the income that we use is your gross income. It's your income prior to taxes. You can count tips, overtime, extra holiday pay if you can prove that you have earned that consistently for the last 24 months.
mm.
It doesn't have to be the same. It doesn't have to be every single month you earned it. We will average it, but we can include it if you need it. If you don't need it, we just don't include it because it just makes your file look a little stronger.
Mhm. What about money like child support or government assistance, benefits, things like that?
Yes, so you can count child support. I am legally not allowed to ask you if you get child support or any other income that you get if you get spousal support, but I can ask you, do you have any other income that you would like to be considered?
Mhm.
And then, so if you do, I'll need a court order. I need something from the judge that says that you're getting it. And then when we go through your bank statements, we want to see that it's being deposited into your account.
Mhm. Okay. What other assets can be used to help somebody qualify?
Retirement, 401k.
Hmm.
Well, I usually, almost every single time, will ask someone, if you've got a 401k, please give me a statement.
Okay.
Because sometimes, depending upon credit and income, sometimes people need what are called reserves. And reserves are 1 month of your mortgage payment. So you might need 2 months, you might need 6 months. And a lot of people will say, what, I don't have that much in savings,
Sure.
but you do have it in your 401k.
Hmm.
So we don't have to access it. We don't have to take it out. It doesn't have to be liquid. But your 401k, if you got into a financial bind, you could take a loan
Mhm.
from your 401k to pay your mortgage. And so that's what we want to see, that you have the ability to pay it if something happens.
So they don't have to take the penalty and pull that money out to buy.
Correct.
They just have to be able to show that the money is there. And that can be very, very helpful. Even for a younger borrower, they've been in the workforce for, 5 or 6 years. They've already got 10 or 20,000 built up in their 401k.
Mm-hmm.
Obviously, they want to leave that to grow as long as possible, but that can still help them qualify to buy a house.
Correct.
That's awesome. Now, can they use that money to help with a down payment if they need to?
They can, if they need to, they can take it out. They'll just have to check with the company that they have their 401k with to
Mhm.
make sure, what are the parameters of making that, tapping into that money.
What other kinds of assets or cash can be considered to help, like gift funds from family members,
Mm-hmm.
other savings, cryptocurrencies, things like that?
Sometimes we can use cryptocurrency. You can use gift funds from a relative. It has to be a close relative, a parent, a sibling. It can be a fiance. They have now allowed aunts and uncles to be able to give gift funds. What I like to do with gift funds is because we have to be able to source those funds. So now I've got to ask for bank statements, and then they've got to write a check to the borrower. They've got to deposit it. Now we need another statement that shows the check is cleared. So what I like to do is, now I verified the assets. I know that you have it. Just wire that directly to the title company
So
or
that there's
attorney.
no chance that it gets spent on accident.
Correct. And a lot of people, like parents especially, sometimes they don't want their kids to know how much money they have, or they don't want them to see their bank statements. So it's just, it's your money. We can, keep it as private as you want.
Interesting.
Anything that you can turn into liquid cash, we can consider. Stocks, bonds, cryptocurrency. But so yeah, any of that.
And that doesn't mean, again, that you have to sell that asset
Correct.
and have it as cash.
Correct.
It just counts towards, am I saying this correctly, the amount of money that you have, the income that you potentially have, so that it can increase your buying power?
Well, it is your assets. They don't really come into your DTI at all, like your debt to income. But what it does is it just makes your file look stronger. So when underwriting looks at it, if they're looking at something where, you're right there at the top of your threshold, but now you've got $10,000 sitting over here that you can tap into if something happens. Do you get laid off every year? Do you have a spouse that's going to relocate? Now you've got to quit your job and you've got only one of you working. Do you have those reserve funds that in the case of an emergency, you can tap into? So that you're not going to be delinquent on your mortgage.
Okay, so that's the cash aspect, but you mentioned a couple of other things that you're looking at too when you go to get somebody qualified. What were those again?
It's your credit. Your credit plays a big part in you getting approved. And every single loan program is different. If you use a first-time homebuyer program, your credit score can be, a little bit lower. So, and I will tell you, so every loan program is the same. So an FHA, an FHA, an FHA, those are all the same. What's different is each borrower applying for an FHA loan is different. So they're not going to be the same as the one that I had yesterday or the one that I'm going to get tomorrow, because their income, assets, and credit are different than the buyer previously or the buyer after. So all of that goes together for when we'll take a file after someone that we're getting ready to do a pre-approval. We run it through AUS, which is our automated underwriting system, and they will tell us if the borrower is approve eligible. So that's what we want to see.
Okay. And what about somebody who maybe is self-employed? They don't have, every other week or weekly or once a month regular paychecks, truck drivers, hospitality workers, real estate agents, the big one, folks like that. Does their credit matter any differently? What about their income? How is all that factored in?
So their credit doesn't matter any differently, but what I like to use for self-employed and 1099 is a bank statement loan. So instead of looking at your tax returns, because one of the benefits of being self-employed is all of your deductions that you can write off every year on your taxes. So we might be looking at your bottom line that says you make $30,000 a year.
Right.
But now you've deposited $300,000 worth of money into your bank account. So we ask for 12 to 24 months of bank statements. They can be personal. We might ask for personal and business. It just depends on your situation. And underwriting analyzes the deposits. And then they will send me an email. It says, this is the monthly income that you can use. So, yeah.
And then on the credit side, what about the cases, especially for somebody maybe younger, they've gotten their first professional job, but maybe they don't have credit. Maybe they didn't use credit cards. They didn't pay for their cell phone when they were in school, those sorts of things. So there's not really anything showing up. What do they need to do, and how do you help guide them?
There's a couple things they can do. One, if they've got a family member who has really good credit, ask to be an authorized user on their credit card. So that person just adds them to their account as an authorized user. They don't have to give them a credit card. They don't have to give them access to the credit. All you're doing is giving them your credit score for that particular card. And I tell parents all the time, I said, the best thing that you can give your children is the gift of good credit. So make them an authorized user when they turn 16. And then when they get out of college and they're getting ready to buy their first house, they have a great credit score. And they've been on those cards for so long that we will ask the parents to give us 12 months of bank statements. And if we can show that the parents have made that monthly payment for that credit card, then we can exclude it from their debt to income.
Wow.
So it's not one of their liabilities anymore. The other thing that they can do is go to their bank, a brick and mortar bank, and apply for a credit card. And they may give you an unsecured card. They may give you a secured card. It doesn't really matter. And then I tell everyone, go and charge a tank of gas. When you get the statement in the mail, pay off everything except for $10. Do it again. Do it again. And usually within about 3 to 6 months, they've now generated a credit score that is usually over 700.
Wow. So don't pay the whole thing off, though, every month.
Correct. Because with the way the algorithms are set up, they want to see that you can handle revolving credit. So you can have a balance and then pay some more as your bills come in.
But you're keeping it a very, very small balance of $10
yes.
or so.
Because we tell everybody, just for round numbers, if you have a $100 credit limit, you don't want the balance on your credit card to be above $30. So it's 30% of the credit limit. So don't charge any more than that.
Okay, interesting. What else are you going to need to look at for somebody who is wanting to apply for a loan? Like what documentation are they going to need to provide you to get that pre-approval?
So we need 30 days of pay stubs that are current. And then I always ask for the last pay stub of the previous 2 years. That way I've got an account of that holiday pay, overtime, whatever. So I can see that you've had it for 2 years. I want 2 months of bank statements, current bank statements. I want 2 years of your W-2s. Sometimes I will ask for tax returns. It just depends on the situation. 2 years of 1099s. And that's about it.
What if somebody doesn't have, again, a younger borrower or newer borrower, doesn't have 2 years of history with tax returns or W-2s or 1099s? Is there a way around that?
There is. It's like if they've gone to school. All right, hold on a second. I got to think about that one. What did you ask me again?
If they don't have 2 years of W-2s or tax returns to be able to give you, maybe they only have one, or maybe they have not filed taxes in a little while.
Oh my gosh, those are a nightmare.
So you hear it right here, folks. File your taxes.
Yeah, just give me the willies. People don't file taxes. I was like, oh my gosh.
But then you want to borrow $150,000, $200,000, $300,000 from a government-backed program. That can be a problem.
It can be a problem. Yes, it can be a problem.
But it's not an insurmountable problem.
No, this is what I tell people. You go to the doctor and you're sick. And you go in, the doctor says, tell me what's wrong. Tell me everything that's going on with you so they can give you a diagnosis. I tell everyone, I am the doctor of your finances. Please come in and throw up all of your information all over me. Because if I know it ahead of time, there's probably a way I can work around it. I don't want to be in underwriting and the underwriter send me an email and say, well, I found this, and then everything comes to a screeching halt.
Right.
When we send it off, we want that file to be perfect.
Which I can tell you on the real estate side happens very, very regularly, especially with first-time borrowers who have never gone through the process before. They gave all the information they thought was needed, but they neglected to mention blah, 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 and it always comes up.
It does.
That's the thing, is when you are getting a loan and a bank, a lender, and anybody is going to give you $300,000,
right,
they are going to know everything. So if you have not paid your taxes, if you have some issue on your credit report, if you have, not paid some bill and it's, just not been reported,
right,
all of those things are going to be found out.
They are. They are. And I tell everybody, underwriting is there to make sure that we all play by the rules and nobody gets sued or goes to jail. So that's their job. So they want to make sure that they find out everything about that file and about the people who are borrowing the money. I mean, you're borrowing $300,000 for 30 years. That's a long time.
Yeah.
So yes, you're going to pay an enormous amount of interest, but the mortgage company is taking the risk.
Right. Because they're giving you the money up front.
Yes.
And you get the house.
Exactly.
And you may or may not take care of that house. Even.
Exactly.
So there is a lot of risk there.
Yes. And we don't want it back.
So it's
we want the money. We don't want the house.
That is true.
We want the money.
So there is a lot that goes into this, but the steps that are there are there for a reason.
They are.
And they're important. And yes, it can be annoying, and it can feel redundant. Like I've had people, I just provided these bank statements. Why do they need them again? Well, you know what? It's a new month. So they don't know that you didn't clear out your bank account since the last bank statement. They also don't know that you didn't deposit $100 of drug money, and now we have a whole different problem.
Right.
So these things are there for a reason, and that is why you are such a critical part of the process as well. You're there to be the guide.
Yes. Yes, we are there to be the guide, to ask the questions. And because if something happens, they get a phone call, they're calling me first. Well, why do I have to do this? But yes, telling people that you have to provide your bank statements. I tell everyone, as soon as you get pre-approved, you need to send your bank statements in every single time you get paid. Every single time you get a new bank statement, you have to turn that in and turn in all of the pages, even if they're blank. Don't send me a mini statement. Don't send me some kind of printout. Don't send me a screenshot. Send me an actual bank statement. Now, we do have third-party vendors that we use, like the work number. And if your company is signed up with the work number, we can verify all of that digitally. And then we don't need your pay stubs after we've gotten that verification of employment back. You can also, my processor will send you a number and you can link your bank account because it is a third-party vendor. So we can't go in there and get in your bank account, take your money or change your numbers or whatever. But then we will have access to your bank account, your deposits and everything until we close. So you don't have to provide those bank statements.
Well, thank you so much for taking the time to share this. This is valuable information for people who are interested but have not gone through this process. Final question, about how long does this take for the pre-approval process to get all this information together, to get it to you, to have it reviewed, to come back and say, yes, we can buy a house and here's how much?
It depends on the borrower. It depends on how quickly, because when they fill out their application online, it will prompt them. We need this and this and this and this, and upload it. And then if there's anything else I need, I will usually call or email them and say, these are the things that I need. I like to email because it's in front of them and they can go back and refer to it. And instead of, this is their first rodeo, but it's not mine.
Right.
So they don't really remember. All right, now I forgot what I was going to say.
How long it takes?
Oh, okay. So once I get all of the paperwork, I can usually have it done in about 24 hours.
So the process itself doesn't take a long time, but you have to have all the information to make it work. And I can tell you on the real estate side, I've dealt with a lot of frustrated people over the years that, well, I talked to them 2 weeks ago and I still don't have my pre-approval. Well, I give a call to the lender and I'm like, what's going on? Because again, I don't know. I don't see their credit information. I don't see their bank statements. I don't see any of this to get the pre-approval as a real estate agent. I just get the pre-approval when it's done. I get, here's what kind of loan, here's the interest rate, here's how much we're approved to buy. That's the information I get. And I can't tell you how many times where I've gone to a lender, what's going on? And I would say probably 99 times out of 100, I can't say that nobody's ever dropped a ball, but 99 times out of 100, it's, well, I can't issue it because they haven't given me everything. Oh, well, what is it you still need? And I've had, well, I still need everything, to, well, they sent me, half They sent me one bank statement and 1 year tax returns.
Mhm.
I still need the other. To I've got all the tax returns. I've got the W-2s, but I don't have any bank statements.
Mhm.
To I've got bank statements. All of it,
Mhm.
all of it, all of it, all of it. And then I go back and I'm like, well, here's why.
Mhm.
And most of the time, oh, I didn't realize that that was important and we couldn't
Mhm.
do this, or a lot of times it's I thought I sent that.
Mhm.
Okay, well, either it didn't load properly, which can happen,
Right.
or you didn't,
Right.
or I have had the question sometimes of, well, why do they need that? Well, my response as an agent is they need it because they need it,
Mhm.
and if you want to buy a house, you're going to provide this documentation,
Mhm.
and it doesn't matter what lender it is.
Correct.
They're all going to need this same information.
Mhm. This is what I say to borrowers sometimes when they say that. Why do you need to know all this? And I said, well, okay, you know what? I need to borrow $1,000. Will you give me $1,000? And they're like, well, no. And I said, why? Because I don't know you. Exactly. We don't know you either. So we need all of your documentation to back up that you are worth the risk.
Mm-hmm. So good. So good. Well, thank you again. And I look forward to talking to you more and sharing more information with buyers, with sellers, with investors very soon.
Okay.